Hi everyone, thanks for being here today. It's very exciting to see such a busy room and a very busy start to the conference. It's always great to be back in Vancouver. So a little background on myself, I'm Kyle Frank. I'm the VP Exploration at Troilus Gold Corporation. We have a very exciting year ahead at Troilus. I'm looking forward to updating everyone on that. For anyone that doesn't know the story already, Troilus is a past-producing, open-pit, gold, copper, silver project in Quebec, Canada. So this project operated from 1996 to 2010, produced 2 million ounces of gold and 70,000 tons of copper during that time. Successful operation operated by Inmet. Inmet was focused on projects globally, Cobre Panama, developing their copper assets, not investing a lot of money into Troilus, so they did very little drilling once they went into production. So from that time forward, very little drilling, resources were exhausted, they moved the mine into care and maintenance. Following that, Inmet was taken over by First Quantum, and the mine was shut down. So that's the biggest question, why this mine shut down. It was just a lack of drilling. That's really all it was. Left behind an amazing opportunity for someone else to come in. So Troilus, the company as it is today, formed in 2016, purchased this asset privately, went public in 2018. Since then, we've drilled over 300,000 meters. We've developed one of the largest gold, copper, silver assets in the country, and our feasibility study's out, and we're on a short timeline back into construction. So the value proposition, I think, this is a short presentation, so please come by the booth. 3 takeaways from this, from Troilus, is the scale. This is a 22-year mine life we've outlined in our feasibility study, producing over 300,000 ounces equivalent per year. So very large scale. Excellent jurisdiction. We're in Quebec, like I mentioned. This is a mining-friendly community. The town of Chibougamau is about 8,000 people. It's resource-driven, logging, mining, very familiar. The local First Nations had an agreement with Inmet in the past. Everyone's looking forward to getting this mine back into production. Very supportive community. And a brownfield site, of course, is always easier to bring back to life than a brand new site. So a little bit about the timeline. I've talked about the history already. So you can see in the red line right in the middle of the slide there is where we're at now. So we're just getting very close to filing our ESIA, so our impact study for both our federal and provincial permits. We expect to file that in Q1 2025. In Quebec, for a brownfield site, that starts the timeline of what we hope to be about a 12-month process to get a full permit. It's been done before. It can be done again, especially with a brownfield site like we have. So we're looking forward to getting full permits to go back into operation by mid-2026. Financing, which I'll talk a bit more about in the coming slides, is underway already. We've kicked this process off about 6 months ago. We're very confident we can finance this mine and get it to the point of construction decision. So looking forward, like I said, a year for the permit, 18-month build, potentially in full production by 2029. So talking about financing, about 6 months ago, we started reaching out to export credit agencies and different groups that might be interested in providing debt for this project. We're looking at a very large open pit, 50,000 ton per day mine. So with that comes a large CapEx. I'll talk a bit about the infrastructure we have in place already, which offsets that big number. But to build the mill, go into production, our CapEx is about 1.1 billion. So we started talking to export credit agencies. We will produce a gold, copper, silver concentrate. That con is clean. There's very low impurities in it. Very attractive for off-takers and smelters globally. So we've started talking to smelters in Germany, Finland, Sweden. All of them are interested in our offtake of our con. In return for that, they've given us letters of intent for debt financing. So to date, we've secured 1.3 billion in letters of intent from these groups. Obviously, that's more than we need, and we can't do this entire project in debt. But that shows the attractiveness of our concentrate and a project like this, both within Canada and globally. So this is the first step. Due diligence is going to kick off this year. We hope by the end of this year we have a detailed package put in place to put out to the market to say this is how we're going to finance this project. I already spoke about how we're in Quebec. Amazing jurisdiction, great place to work, very supportive government. The government are 12% shareholders of Troilus already through their investment funds. So we have very strong support both locally and provincially. Just a map of our property. You can see in the top right, we have a 500 square kilometer land package in the Frotet-Evans Greenstone Belt. Sure, everyone here is very familiar with the Abitibi. We're just north of the Abitibi. The Frotet-Evans, historically less explored, more till coverage, harder to make discoveries, left behind the opportunity that it has today. So if you're thinking Frotet-Evans, it's very similar to the Abitibi, same structure, very similar age, and same environment to find these massive gold deposits. So we were very lucky with our resource development. When we acquired this project back in 2016, the resources had been exhausted. There was 2 million ounces left at depth. We weren't sure if this was going to be an open pit or an underground project. Organically through drilling, we've built out the resources, developed this large 13 million ounce open pit resource that we have today. Like I said, Inmet didn't do bad work. They didn't do any work to build this resource. And just through throwing enough meters at this project and being smart about it, we've been very successful in building out one of the biggest resources in the country. So a little bit more on the feasibility study. I already mentioned 22-year mine life, large scale, producing over 300,000 equivalent ounces of gold per year, and maxing out at over 550,000 ounces in year 6, 7. So very large scale. This would be a flagship asset for a company. With the large production, open pit, very low operating costs of all-in sustaining costs of around $1,100 in our feasibility study. Okay, so running out of time, so I'll have to skip through a few slides here. One other thing to keep in mind with this project, it's a cash flow machine. Big CapEx up front, get into production. At our base case of 1975 gold, we'll produce over 150 million per year in free cash flow, and 2.2 billion over the life of mine. This is just a quick slide to show us a comparison to some of our peers. On the far right is our costs compared to other feasibility studies that have come out in Canada over the last 5 years. You can see we're at the top of that list. That's where we should be. We came out post-inflation. These are all 2024 numbers that we use in our study. Certainly not outdated yet. Very confident in the inputs that we used, that we had real costs that we can stand beside going forward into construction. I've mentioned that we're gold, copper, and silver, so that's about 83% gold, 15% copper, and a couple percent silver, producing about 75,000 wet metric tons of con a year. Again, very attractive for the off-takers. I've already talked about CapEx and operating costs. So one of the most important things at Troilus is it's a brownfield site. So there's already roads, power, tailings, and substation are already in place. We value that at about $500 million US in inherited infrastructure that we don't have to build. So if we were going to build this project from scratch, you'd be $1.5 billion to build it. With this head start, offsetting our CapEx significantly. So the value proposition, I'm sure everyone here has heard of Artemis. They're doing a great job here in BC. On a resource side, we have a very similar resource, very similar grade as Artemis. Artemis is about 3 years ahead of us. They have their permit, they're financed, they're constructing, they're just about to go into operation. They're a $3 billion company. We see ourselves in that position 3 years from now. So we're an $80 million company. We're going to file our ESIA this year. We're going to start ticking those boxes, put our financing in place, and we see ourselves with a great opportunity for a re-rate in the years to come. We are a development and exploration company. We've been recently building out our team to build out our operation and construction experience. Our new chair of the board is Chantal Lavoie. He was the former COO of Iron Ore Company of Canada. Very experienced mining engineer with 30 years experience, working in big companies, big operations, and provides a lot of knowledge to our team. There's going to be more hires to announce very shortly. In the recent weeks, we announced Andy Fortin is the new VP Ops at the Troilus mine site. He actually worked for 10 years at Troilus when it operated. He's a metallurgist by training. He's worked on several projects with Agnico, Eleonore, going through construction and commissioning into production. So very experienced operator and a great addition to the team to build out the the operations team. We've already talked about the timeline. This is just to reiterate more of the construction timeline. Again, looking ahead in a perfect case to full-scale production 2029. We have very, very strong support by the community. We see ourselves as leaders in ESG. This is, we've gone kind of the extra mile to be a sustainable company and be sustainable going forward. And, have very, very strong relationships with the Cree community as well. And like I mentioned, everyone's looking forward to putting this back into production.